That's all I have. That's all I made. Okay, she can hear you guys. Hi. Can't see you. I have this thing off.
Well, Claire, I have 10 o'clock.
Yep.
So
we'll get started. I tried to welcome everybody individually, but I missed a couple, I'm sure. But thanks everyone for coming to hear our Insurance Commissioner Patty Kuderer. Prepare yourselves to be very impressed, and I think Derek is going to give us some housekeeping advice, and then I will introduce our guest speaker.
all right. Thank you, Claire. Good morning, everybody. Thank you for joining us today. We ask that you remain muted during Commissioner Kuderer's presentation. We will take questions at the end of her presentation. We ask that you drop your questions in chat, and staff will go through and pull questions from that. So with that, I will turn it back to Claire.
Thanks, Derek. Patty Kuderer, Washington's 9th Insurance Commissioner, brings a long-standing record of advocacy for working people, consumer protections, and retiree security. She was elected last year and assumed office at the beginning of this year as our current insurance commissioner, and after years of service in the state Senate, where she championed accessible and affordable health care. As insurance commissioner, she has made it a priority to protect older Washingtonians and public sector retirees. She's emphasized enforcing strong consumer protections in Medicare and other coverage. She's spoken publicly about defending the state's most vulnerable, including Washington's 1.5 million Medicare beneficiaries. As both state senator and now insurance commissioner, Patty Kuderer has advanced legislation that strengthens consumer protections and safeguards the financial security of older Washingtonians. She has advocated to provide the financial security. She has advocated to provide the insurance commissioner clear authority to require insurers to compensate policyholders who are financially harmed. Supported reforms that increase transparency and oversight of the insurance companies, and championed stronger notice requirements when insurers refuse to renew coverage. She has also promoted regulation and consumer education around long-term care insurance, work to ensure hearing aid coverage and other age-related benefits remain accessible. Commissioner Kuderer is a tireless advocate for equity, accessibility, and consumer protections. Thank you for being here today, Commissioner. The podium is yours.
You're all going to hear my fire alarm is going off. So if you give me 5 minutes, I will move to a new location and I'll be right with you. I'm so sorry. I'll be right back.
Not a problem.
It's not your fault.
It might be her fault.
Right, just make sure there's not a fire.
I know who said that.
Yeah, who pulled it?
Make
It's like
sure there's not a fire.
It's like a prank. I said that. For those of you who I haven't been introduced to yet, I'm Tim Smolin. I'm your Shiva program manager, and I'm here to help provide some staff support for Commissioner Kuderer today. So looking forward to as Claire said, kind of the question and answer portion of the program. So yes, I've seen the commissioner's remarks, and I think it's a good program today, but I know that you'll have a lot of questions beyond her prepared remarks, and I know she's eager to engage with you in the conversation. It's ironic that it's a fire alarm, because that's and she's going to say this in her remarks, and I'm sure you've seen the news across kind of the weekend about continuing challenges with the insurance market in California on account of forest fires, and that is a kind of top of mind concern for us. Is how in in the kindest possible way, like how does Washington market not turn into the California market, because it is so challenging there right now. So I hope that she appreciates the irony of the fire alarm. At my house, it would be me making the stove too hot to cook something in my cast metal wok, and setting off the fire alarm. So it really would be my fault at my house, and I'd be getting scolded by my wife for 5 minutes.
Tim, how is Medicare enrollment going? How's Sheba handling things?
Well, Amy, that's a great question. I would say, I had a chance to meet with the commissioner-elect last year around Thanksgiving holiday, right between the time she was elected and the time she was inaugurated. And I said, last year I would say like it would be like an 8 on a Richter scale. And I said, next year it's not going to be an 8 again, but it's not going to be a 2. It's still going to be tons of work, tons of drama, and it has been. So big drivers for us this year. Again, like last year, folks who have Medicare Advantage plans got discontinued letters. So Kaiser, about 50,000 people, Community Health Plan of Washington, about 30,000 people, and then a bunch of smaller plans, a bunch of smaller numbers. And then, of course, just all of the drama about the Trump administration and reductions to Medicaid programming and how does that affect Medicare beneficiaries. Some of the work obviously is kind of us marketing the program. We're trying to reach out to people, make them aware of the opportunity. So we created, I hope you all saw, we created this thing called the Medicare Open Enrollment Jumpstart Toolkit that we've distributed through the libraries and senior centers. I think that's been a great success. So we've seen some more contacts. A big focus for us is folks in rural areas, especially because historically we just have not done as great a job with them. So I'd say all things considered, it's been a really good year and just still very challenging. So there's always a surge of work that happens between Thanksgiving and the end of the Medicare open enrollment period. So this is that week for us. So wish us luck. Welcome back, Commissioner. I'm just filling the time here.
I mean, how is that for an entrance?
Pretty good.
My apologies. I guess that's real life entering into our meeting space here. But anyway, I just want to start by thanking you for that kind introduction and just say hello to everyone on the call. I'm really grateful that you're here. And you already met Tim. Tim, as you know, is our Sheba program manager. He is as much of a gem as the program is. And, I've learned so much from Tim about Medicare and Medicare Advantage. And I'm really, really grateful that he's in the position that he is in. So with that introduction, I'm going to launch right into it. These are difficult times for all of us. And I'm just going to start by saying we no longer have a federal partner in the other Washington. And instead, we have a federal administration that is intent on breaking the very systems that we have been working to protect and improve. And I don't think I'm exaggerating when I say that we have what I have termed a clown car of incompetence running our federal agencies. They don't value science. They don't seem to care about what the data says, but they're very good at breaking things. But in this Washington, we do value science. And we do rely on data to direct our work. In fact, as a former trial attorney, I can tell you that I am very heavily data-driven and very heavily evidence-based. I think that makes for the best policy and the best practices. And as Tim indicated, We are currently in the throes of Medicare open enrollment and also open enrollment for our individual health insurance market. And this time of year is incredibly overwhelming for people. And yet, instead of helping, the federal administration has failed to fund the tax credits that help more than 200,000 people here in Washington afford coverage in the individual market. And many of these people are early retirees who do not yet qualify for Medicare. But the administration doesn't look at things like that. Instead, it was so wedded to tearing down the ACA tax credits that we endured the longest government shutdown in history. And when it finally reopened, all we got was a weak promise that they were going to vote on those tax credits. But interestingly, now the president is hinting at a plan to save the tax credits. I guess I'll believe that when I see it, because January 1st is right around the corner, and we already know that as many as 80,000 people could drop their coverage if they don't get this premium assistance. And while we've enjoyed a record low uninsured rate of 4.8%, we can expect to see that number rise. And quite frankly, it's because of the ACA, which expanded access to a lot of Americans to get health care, and the premium tax credits, both the ones that are embedded in the ACA and the enhanced premium tax credits. That's what allowed Washington to go from a 15% uninsured rate to that 4.8%. And I can tell you that that helps stabilize the health insurance market here in Washington state and actually helps stabilize premiums. So unfortunately, what we're seeing is a double-digit rise in healthcare premiums this next year, and a good third of that is devoted to or is a result of the Congress's refusal to extend those enhanced premium tax credits. So there are many, many impacts from HR 1, that big, terrible bill that was passed that don't take effect until later. But we know that the impacts are going to be devastating, and that is especially true for our Medicaid population, because that bill pays for tax cuts for the wealthiest Americans by cutting programs for the most vulnerable among us. In Washington, approximately 140,000 older adults between 50 and 64 are covered by the Medicaid expansion. And about 217,000 people are dual eligible for both Medicare and Medicaid. And this administration is trying to reduce the money they spend on Medicaid program by adding a work requirement and by repealing the efforts to streamline the enrollment and renewal process. And I really wish I had better news on this front, but I'm afraid many of the impacts will be devastating for these folks. And I can assure you that leaders across our state and in our delegation are working together to see how we can mitigate that damage. For Medicare Advantage, when I went around the state working to earn this job, I can tell you that healthcare was the #1 issue I heard about. And of that, about 50% of the complaints were about Medicare Advantage. And we have invested heavily in our Sheba program this year as a result of what I heard on the campaign trail, to make sure that the ads you saw out there were not the only voice. As Tim pointed out, we also jumped our new Medicare Jumpstart Toolkit. It's the first in the nation, which was designed to help navigate people through their choices so that they could make the best decision for their needs. And it was also brought to my attention that some insurers had stopped paying commissions to brokers for certain Medicare Advantage plans, effectively steering people to the plan that was in the best financial interests of the company. I sent letters to CEOs of United Healthcare and Humana last week outlining my concerns and asking them to stop this practice. And unfortunately, I don't have the authority to make them pay those commissions, but we'll see if that public pressure can work. Because honestly, I grew up in a family where it was an honest day's pay for an honest day's work. And I really find it immoral that they would expect people to work and not get paid for what they're doing for these companies. So let's see what happens there. And more bad news. I want to say a few things about the WISER program. I'm sure many of you have heard about this program. And I'm sure many of you have concerns about this proposal, which is for original Medicare. I also share those concerns, have been very vocal about my concerns about this program. And I want to start by just saying we didn't apply to be one of those pilot states. We were chosen by the federal government, as were the other 5 states that did not ask to be included in this. And I have heard from a lot of seniors who are upset about what this pilot program is designed to do. Because under it, original Medicare patients will now be required to get prior authorization for 17 separate services. And the companies making the determinations will be allowed to use AI, artificial intelligence, along with clinical review to make their determinations. But there are really a lot of problems with this approach. First and foremost, it's not clear how the AI will be used alongside the criteria and what standards they're going to be using when they make the denials. And we've adopted rules to lighten providers' administrative burdens when it comes to prior authorization. And this WISER program appears to be in direct conflict with that effort. And finally, the companies that are making the decisions will be paid based on the money they save Medicare. And in essence, what this is an incentive to deny care. And I find that very, very troubling. I've been very public about wanting to hear from consumers if they have trouble accessing care. And while Medicare is under federal, not state jurisdiction, I want people to contact us with their Medicare and Medicare Advantage complaints anyway. Because we collect those stories, we share them with members of Congress. We'll make sure that your member of Congress gets your complaint so that they hear from you directly of what's happening. And we also here can keep track of those complaints so that when we go out to the other Washington to talk to them about Medicare, we can explain to them why it's important that they give states more control, especially over the commercial advertising that goes on within our states about Medicare Advantage plans. Now, I know up until now it's been pretty much disappointing news. So before I take your questions, I do want to leave you with some positive news, because I know it's certainly easy to feel overwhelmed at this point in our nation's history with everything that's going on and with all the actions that need our attention. But as I heard my dad say a long time ago, out of great tragedy comes great opportunity. And I think that the potential to move us toward universal health care is one of those opportunities. And universal health care is what drew me to run for this office in the first place, because I do believe that healthcare is a human right. And I think we have a system today, I know we have a system today that puts profit over people. And we're seeing the results of that everywhere. Skyrocketing healthcare costs, consolidation of providers, soaring drug costs. States have been the incubators of change. And I still think that's true today. And we recently heard from colleagues in Oregon about the possible benefits of banding together to sell insurance across our state lines. And this is allowed if you get a waiver under the ACA, the Affordable Care Act. It's called a Section 1333 waiver. And when this concept was first proposed, it was very unpopular among the more progressive-leaning states. And that's because it was looked at as a bit of a race to the bottom. But I think it's time to reimagine this idea and get together with like-minded states to see what is possible. In fact, it's something I was thinking about back in 2017 as I started thinking about the best way to form an interstate healthcare compact to create universal access for folks along the West Coast. Because I think banding together with other states could expand our pool of people who are covered and potentially lower costs for everyone. And I've also talked with our former insurance commissioner in Alaska. Her state received a federal waiver to implement a state-run reinsurance program that's had a big impact on their market. The reinsurance program pays for the highest cost claims in the market and helps to keep premiums down for everyone else. The federal savings are passed back to Alaska to help pay for the program. And 17 other states have followed Alaska and adopted a similar policy. And I think Washington should look at that possibility as well. So I'm sharing these ideas with you because I want you to know that despite the bad news coming out of the other Washington, we are definitely putting our heads down here and getting to work and trying to move our state forward toward policies that actually do what government is supposed to do, which is improve the lives of the people that it serves. So that is what I have for you today. And again, apologies for my fire alarm going off. It wasn't just mine, it was the whole building. But I apologize for that. And thank you again for this opportunity. I always enjoy speaking to RPEC and very happy to take whatever questions you have. And Tim also is available for questions.
Great. Thank you, Commissioner. I do have a question and comments from Lori. Are there any indications that insurance companies, whether locally based or national, have been infiltrated by private equity?
Yes, they have. And there is work being done in the legislature to address that. I know Senator Robinson has been looking at this for quite last few years, actually. She has a bill to look at the private equity ownership, corporate ownership of healthcare. And, you know, I think private equity can do good things, but I don't think I don't know that this is a good sign for healthcare to have private equity involved here, because their overall goals are different than what I think a healthcare system's goal should be, which is to provide quality healthcare, preventative, as well as emergency, and, you know, whatever the needs are for the people. I think that should be the goal, is patient care. And that is not the goal for private equity. The goal for private equity is profit. And so I definitely have some concerns about that. And I want you to know too, the healthcare industry managed to get itself exempted from federal antitrust laws. And so the consolidation that we're seeing happening, which is definitely adding to the overall cost, increased cost of healthcare premiums, is actually one of the things cited by the insurance industry when they came to us with their request to increase rates. Consolidation was one of the factors that they mentioned. It is a real problem, and I think that it's something that our own Attorney General should be looking at, because while they're exempt from federal antitrust laws, they're not exempt from state antitrust laws. And I'm sorry for the noise if you can hear that. There's a lot of work going on in my building at the moment. Probably why the fire alarm went off.
That's fine. Let's see here. Aruna asks if, can you please explain reinsurance in more detail?
Sure. Reinsurance is essentially a different layer of insurance that can actually help stabilize the market. It exists right now in all markets. So property casualty has a large reinsurance market. And they are insurance companies that primary insurance companies go to get coverage to cover if they have an excess so that they can continue doing business. So it is insurance for insurance companies, essentially, is how I would describe it.
Thank you, Commissioner.
Mm-hmm.
Claire asks, can you enlighten us about the major drivers of recent high cost escalation in auto and home insurance?
Well, the number one reason for the high cost of property casualty insurance claims, and it's not just the number; it's the amount that has to be paid. So, like for example, for your auto premiums, the cost of claims is driving that. And you know, the reality is it costs a lot more to repair the smart cars of today than it used to. I mean, you know, a Tesla that gets in a fender bender, you know, that wouldn't normally not cost a lot of money can cost thousands of dollars. A, and B, that car sits in a shop for months because of supply chain issues, and because of how it's built and the potential for the battery to ignite a fire. The repair shops have to like empty bays on either side of that vehicle while it's being repaired. And that's the industry telling me that directly. And so these are the kinds of costs that increase overall premiums. And the best way, obviously, to bring costs down is to increase competition and to decrease the number of claims. There are some things that we can do. I think we need to bring back one of the things that I had growing up was driver's ed in school. And I honestly think we should bring that back because some families can't afford driver's education. And so they end up paying a higher premium because their child can't get the driver's ed discount. So I think there are some things that we can do on that end. And also in terms of just, the overall claims, the costs the costs are the costs, and I would like to see them come down. But the inflation and the tariffs, that's another one that the industry has brought up to me. Those tariffs are not helping us in terms of the property casualty premiums. Now, homeowners, that's being driven also by claims, but it's also being driven by perceived risk, especially when it comes to wildfire. And we had a wildfire risk mitigation work group this last interim that we worked very hard on to provide recommendations to the legislature on what we can do to make sure, A, that people who are in potential wildfire zones who are getting non-renewed have access to insurance. And B, that we can get ahead of this and be more preventative in our approach. In other words, where we can invest in hardening our infrastructure. This is where the wildfire risk mitigation program is going to come into play, that we're making a recommendation to the legislature that they create. Would like to see a pilot program to start so we can look at the data and analyze how it works. But the idea would be to utilize standards that we get from the Institute for Business and Home Safety, which is an insurance-backed organization that looks at the best way to reduce fire risk and hail risk and wind risk and water damage, et cetera, and utilize those standards in our construction and remodeling and fortification of infrastructure, both home and business, in order to reduce the perception of risk, which will help stabilize the premiums. Now, I will say this, in the past, the companies really had not been factoring in the impacts of climate change. And so the rates that they were charging were not commensurate for the risk that they were insuring, and they were playing a bit of catch up. They seem to have caught up in terms of that, and the rates are starting to stabilize for property casualty. And while that's a good thing, I would still like to see them go down as opposed to even just remaining stable at this point. And I think the way to do that, like I said, is to invest in prevention.
Good. Amy has a question regarding Wiser. Will your office receive monthly data from CMS, especially the number of pre-authorization requests, declines, and appeals, so a course correction could occur early in the program implementation?
Yeah, that's a really good question. I don't know the answer to it. I don't know if, Tim, do you know the answer to that?
I don't. Thanks for asking, Amy. Commissioner, I don't know. I guess I would just, kind of following on the what you said earlier, I don't expect CMS to share those data back to the states. I mean, they're just not famous for being very transparent about the operations. But we will be tracking the complaints that we receive, as the commissioner said, and invite, right? So for sure, inviting anyone who has a problem, a delay or a denial, we'll be tracking those and reporting them back to you. But I don't expect CMS to share their data back to us. Yeah, I can certainly ask, though.
Yeah, and again, Medicare is under the federal jurisdiction. I will say this too with the WISER program. They're going to be reviewing this annually, but I suspect they're not going to be reviewing it annually to say, okay, we don't need to have prior authorization on, this procedure and that procedure. I think they're going to be reviewing it annually to continue to add procedures, because I think the ultimate goal here is to make original Medicare exactly like Medicare Advantage, but without the dental, the vision, that sort of thing, so that you're almost forced to go into Medicare Advantage Plus. They want to privatize Medicare. That's the bottom line. And I think that's a really bad idea.
Great, thank you. And while we're on Wiser, Aruna asks, can you please explain the Wiser appeals process and timelines?
Yes, maybe not quickly or easily, Aruna. For folks that don't know, Aruna and I are pals because she's one of my Shiva volunteers from Spokane, and she also is on the advisory board for the Aging and Long-Term Care Eastern Washington, which is our business partner there. So it's a little bit complicated, and Claire, I'm trying to just manage Derek, manage myself a little bit, because I can just kind of go on and on, but a person who is experiencing a potential delay, Aruna, they would manage that the same way they would manage kind of an ordinary. There's a very limited amount already in the original Medicare program process for prior authorizations for procedures that are unusual as far as CMS is concerned or the Medicare administrative contractor. So there is an ordinary process in place for that has its own kind of process and timelines. I think, as the commissioner said, the unknown for us a little bit is what will be the byplay between the AI review and the human being clinician review, and how will that affect the process. So I think it's a little bit uncertain, but I'll take a note to send you all a more detailed follow-up.
Great. Thank you, Tim. This next one bounces back to property insurance. Dan asks, can states with fewer disaster claims be shielded from rate increases for property insurance when it's the states that deny climate change that are submitting the most claims due to natural disasters?
Yeah, well, right now, the rates in Washington are supposed to be based on claims made in Washington and only that. But it's hard for us to actually know for sure because of the algorithms that they use in order to set the premiums. Last year, one of the things we requested the legislature help us with is fund the salary of an AI algorithmic expert. And that is to help us figure out, whether or not claims that are being made in other states are influencing the premiums here in Washington state. We've been very fortunate. We haven't had the same wildfire situation as, say, California or Colorado has had, and we don't want to get there. And so that's why I'm saying we need to be very, very proactive. This is where my personality, preventative based, I don't want to have a problem in the first place. That kind of personality meets the insurance industry's goal of not paying a claim. So, we're in alignment on that. I don't want to have a fire. I don't want people to, experience a wildfire, lose everything, and have to file a claim on top of it. So, my sense is that our best bang for the buck is going to be in prevention. And so my agency is going to be very focused on that and helping people become, less exposed to wildfire risk, flood risk, wind and hail risk, that sort of thing. And I will say too that the industry is very interested in this wildfire grant mitigation program, and they would like to see us go in this direction too, because essentially what this program does is underwrite their business model. Just like I said, it does help them, it prevents them from having to pay a claim. And getting back to the AI algorithmic expert, that's going to help us on the front end figure out whether or not the premiums that are being charged fairly. Okay, I can already tell if they're excessive or inadequate, but whether or not they're being unfairly applied, that's the animal that the AI can be a little funky with, and that's why we need an AI algorithmic expert.
Thank you. This may be more of a PEB-related question, but Steve asks, is there any progress in reducing the gap in cost between the state's Medicare Advantage plans and the state's uniform medical plan? And what are the factors contributing to that?
Do you want to talk about that, Commissioner?
No, you can do it, Tim.
Sure. So I love meeting with you guys. You have such good, complex questions. So the short answer is, and I don't know if my friend Matt Grishong is here this morning. If he is, good morning, Matt. Matt is your healthcare chair, and he and I recorded handful of programs. Alyssa, I know is here. So the short answer is that what's different about the Uniform Medical Plan, which is on the medical side administered by Regents, on the prescription drug side administered by MODA, is that it's what we would call a self-funded, self-insured plan. So as the commissioner said about the the rates for property and casualty insurance in general, the rate for the Uniform Medical Plan is a forecast. The actuaries make a forecast of what is the total cost of claims going to be for everyone that's enrolled in Uniform Medical Plan for the year ahead. So essentially, the group makes its own rate compared to all of the other plans in the PEB portfolio. So that would be Premera for Medicare Supplement Plan G, the two United Healthcare plans, or the Kaiser plan. Then in those cases, the plan is actually at risk. So there's a negotiated rate, and I'm just going to say Kaiser as an example. So the healthcare authority is paying the rate that they negotiated with Kaiser, but the risk is on Kaiser. If the actual cost of claims for all the all the PEB members that pick Kaiser is higher, Kaiser experiences the loss. So the difference is really about who's bearing the risk. And the Uniform Medical Plan is because it's a self-insured, self-funded plan, the rate reflects the cost to the state of providing care directly for those members. So it's just about who's enrolled in the group and how much their claims are going to cost. Because it's a relatively generous plan, it pays well beyond what Medicare pays. The rates are going to be slightly higher. So compared to Premera, for instance, right, which only pays for Medicare covered services. So if we compare those two plans, which align to original Medicare, then that's what's happening there. If we compare them back to the Kaiser plan or the United Healthcare plans, those plans actually receive a subsidy from the federal government. So they are Medicare Advantage plans, so they receive funding directly from the federal government as well as the funding that the healthcare authority contributes. So although the benefits package is not materially different between UMP and UHC or UMP and Kaiser, because there's that federal subsidy, because it's a Medicare Advantage plan, the rate ends up being substantially lower. Again, if Matt was here, he would help me with the figures, but I think for a single Medicare retiree with Uniform Medical Plan next year, it's about $3.25, whereas for United Healthcare, it's like $1.75, right? And so that difference is all about that federal subsidy.
Thank you, Tim.
Is that helpful?
I'm not seeing any other questions in chat. Does anybody else online have a question? You can feel free to raise your hand.
Thank you.
Aruna.
Yes, thank you, Commissioner and Tim, for taking time to explain things. My question is, what can we do proactively so that they don't add more procedures to WISAR next year? At least we stop the choo-choo train from going further. Thank you.
Right. Well, I put a note in the chat for you, Aruna. It's all about rulemaking that will be done by CMS. CMS, of course, is part of Health and Human Services, so Secretary Kennedy's administration. In order to change that list of procedures or supplies, as the commissioner said, it's a pilot where we expect that list to grow year over year. That would be done through rulemaking, and there would be a time for public comment about those rules.
In addition to that, Aruna, I would say reach out to your congressional delegation and let them know how you feel about this and your concerns about the WISAR program. I think they need to hear this. And like I said, we'll take the complaints too and pass them along. And if you need that information, how to contact your congressional delegation directly, we're happy to provide that information as well.
Mm-hmm.
Thank you, Commissioner. Thank you, Tim. Tony.
Mm-hmm. I wondered what the best way is for me as an individual versus part of RPEC to communicate with the Commissioner's office.
The best way would be by email to commissioner.kuderer@oic.wa.gov. that gets to me. And
Could you say
yes,
that one more time?
sure. It's Commissioner
Mhm.
Kuderer
Mhm.
at oic.wa.gov.
Thank you.
Yep. And complaint line is 1-800-562-6900.
582-6900.
I think it's 562. Tim, you want to look real quick?
562 and
1-800
1-800. Thank you.
562-6900.
Thank you.
Thank you, Tony.
Mhm.
Vala, you're next.
Hi, Commissioner and Tim. Tony asked part of what I was going to ask, but what you talked about the insurance companies being able to drop you when you had a certain dollar amount of claims or something. So we had we have a site, a warehouse or a storage unit off site from where we live, and have paid our insurance on that for 50 years. My husband has, and we had 2 claims because somebody broke into the storage unit one week, and then the next week they came back and got more, and then we moved storage units. But so then they dropped us. So we had to go out to a broker and get insurance, for I can't remember what we're called now, but nobody wants to take us on. So they got us something and it actually doubled in price. So when you pay in for so long, what are we paying for if we use it and then, they do this to us?
Yeah, it is definitely a common complaint that I hear. I've been with a company for 50 years and then they non-renewed me. And on the one hand, I'm somewhat heartened by the fact that they actually told you why, because a lot of times I'm hearing from people that they're not even told why. Transparency is a big part of what we're trying to get established here at the Office of the Insurance Commissioner. And I'm talking about transparency from the industry and how they deal with their consumers. And that does include when they non-renew. I guess what I would tell you is, first of all, I'm really sorry that you got broken into. You see, this is something that is not your fault, right?
Right.
And you had to make a claim and you're dropped because of it. There has been legislation introduced, and I believe it might be coming back next year, which is to say that if the claim is not your fault, it can't be used against you. So this would require a legislative fix. And I'm trying to remember who the legislator was who dropped it. And it's escaping me right now, but that is the bill concept that essentially says, look, if somebody's at fault, like if you rear end someone, that's a claim that you caused. But the person who got rear-ended, who wasn't doing anything, may have to make a claim on their policy. They shouldn't have to be dinged because they happened to get hit. That's the concept, and that's what it sounds like happened to you with people breaking into your storage facility and stealing from you. And you're right. That's why people, when you think about it, property casualty insurance is the only product that you buy that you hope you never have to use. But when you have to use it, you want it to be there for you, and you don't want to get a letter from the insurance company saying, well, bye-bye, now we're dropping you. So 2 things I would say, check in with your legislator about what happened to you and why you think the law should be changed. And you can file a complaint with us. We'll do what we can to investigate and see if there's anything else that we can do for you. But we can't force an insurance company to insure anyone. I think we all know that. But we can make sure that they're treating people fairly.
All right. Thank you. I will do that then.
All right.
Great. Thank you, Vala. Any other questions for Commissioner Kuderer or Tim Smolin today? Not seeing any. I will bring Claire back up then.
Thanks, Derek. Commissioner, I really appreciate you giving us your time today. We thank you from the bottoms of our hearts. And Tim, thank you also for being here to elucidate some other parts of the issues.
Me too.
I understand that we will have a recording of this session of this meeting together that'll be linked in the weekly news flash and I think posted on the website in the form of a blog. Is that correct, Derek?
That is correct.
And I feel like I learned a lot. And Commissioner, I'm impressed every time I get to listen to you talk about the stuff that you're so passionate about. We really appreciate that passion that you bring to the job. And thanks very much for all your time today.
Thank you. And again, apologies for the fire alarm going off. Hopefully you can edit that out of your taping.
I'm just glad there was no fire.
Me too. Me too. That would have made it very awkward. All right. Well, thank you all so much for your time. I always enjoy the opportunity to speak with you.
Thank you, Commissioner.
Thank you.
Thank you.
Thank you, Claire.
Thank
Thank you, everyone.